Hi there, I'm Isaac. I'm going to take you through some price action that was shown to me by one of our elite traders. This is a Eurostoxx trade from Tuesday, March the 10th. And the discussion really came about because we were talking about the use of price action to get good entries to your idea, and he wanted to show me some particular price action, and so we're going to go through that now. Alright, so this is the trade, well this is the day's trade, or sorry, the morning's trade, and the market's Eurostoxx, and yeah, if you can see my mouse moving around, you can see we open here, so this is 7 o'clock, and here is cash open, and so what we've got here in these green lines is the initial balance. So the initial balance is made, the market pushes below the initial balance low, breaks back into the initial balance, and then drives up to the initial balance high, breaks out, falls back in, but can't sustain inside the initial balance and trades back out. Now at this point, even just based on these factors, this market's now looking like it wants to trade up, and so ideally you want to look for a position or some way to position in here for a trade up. Now this yellow line here, this level is the high from the previous day, and so this is quite a nice trade from the initial bounce high to yesterday's high, and that is what is shown in the video, although we're not going to cover all of it again. Just sort of what I want to emphasize is the price action for the entry, because that was what this conversation that we had was, and you know, it's really interesting to, I suppose, like to dig into that. That's where for me the learning was, and that's what I'm going to share with you. Okay, so let's just talk about this. I suppose like take a step back and talk about this from the bigger picture, and then let's see how we actually construct this trade and the trade entry. So here we've got a couple of charts. So on the left is the daily candles. So you can see, you know, we're obviously in coronavirus conditions, and the market's extremely bearish. I've made this little daily flag and then popped down. This was on Friday, and then over the weekend there was a gap, and then Monday the market held this gap, was a bearish candle but had quite a big rejection, and then yeah, and then we're talking about this Tuesday here. So we've got quite an extended market, we've got a gap above, and this gap's held. Now this middle chart, this shows, well, this is like a profile session breakdown. So here is the open on Sunday night, here's Monday's pitch session, here is the session sort of, well, that starts at the end of Monday's close and goes through until up to Tuesday's pitch session open, so the cash session open. And then here is the cash session that we're discussing. So I suppose what's interesting here is, okay, we've got a gap, the market held the gap, or the market gap down over the weekend, held it in the pit session and bounced off, closing within a balance. The overnight session took out the lows of yesterday's pit session, so that kind of suggests that the lows are vulnerable and it couldn't take out the highs. But one thing it did do was that the overnight session brought the price back up, and so I suppose as the European morning brought the price back up, so that when the cash session to open for the US, that it opened above value, but still within the range. And so this is kind of an interesting situation now, because okay, we've got this bearish market, we've got potentially vulnerable low because we had overnight trade breaking this nice balanced, or the low of this nice balanced day yesterday, but we also have a gap above. And so maybe it's best to talk on the chart on the right. So this is just the two cash session. So here's the cash session for Monday, which is this balanced day, but held the gap. So while it's balanced, it's still very bearish. And then here's the pit session of the day we're talking about, and And so you can see here, we open here above this balance. And so we've got this gap above and we've got this vulnerable low and kind of the bigger trend heading down. And so there's kind of a bit of a decision that the market has to make. Well, we've got the middle of this balance around here with the POC and VPOC. Can we get and hold below that? That's what we should be thinking. If we do, then we want to be targeting these lows. If we can't, well then we've potentially got a gap test above. And so you can see here, again, this is that yellow line we talked about in the previous chart, which is yesterday's high. So obviously we know what happens because we've got the chart here and the market does test up, fail and come back down. But yeah, what we're really interested in is sort of, and without knowing the rest of this, the fact we've set this IB, we've got here a false break of the lows, and now potentially looking to play the upside trade until that fails, and then potentially the downside trades on. So let's just summarize what we talked about then. So in the bigger picture, we have a bearish market. We had a gap down, and yesterday's trade held that gap. The overnight trade created a vulnerable low, and we are opening within yesterday's range but above value, so we've got to get through yesterday's kind of value decision point before we can really start to get bearish. And that's what we should be thinking as we go into this day. So yeah, again, that's the idea. So trend continuation if you get below, otherwise potential test of the gap above. Now, because we already know what's coming up, kind of as the day develops, what have we seen? Well, we see a false break of the initial balance low. We then see the market come up and break the IB high. We then see it fall back inside the IB, but then push back out. And now that we've seen this false break of the lows, and the low of this IB kind of corresponds to that decision point, the sort of the center of value for yesterday, now potentially we should be looking for a trade to the upside. Do we break yesterday's high? Do we potentially try and close this gap? And so that's the idea we should be thinking, but we need to find the entry. So again, here we are back at the 1 minute chart, and so you can see it again, the bearish start to the day, this false break of the IB low, trades up, breaks the IB high, false breaks back into it, pushes back out, and then we've got this. Now, this is the trade that our elite trader takes. He gets long in here and rides it up here, and this is a really good trade, obviously. But the bit we really want to talk about is in here. Okay, what we've built this idea that we just discussed before, but now how do we go about executing on that idea? So we've got this idea, or we've got this information that suggests, if the market can't break these, if it can't break back, or sort of position itself in a bearish position below yesterday's point of control, then potentially we've got this gap closing, sort of play for the highs trade going on. Okay, so we tick that box. We've got into the IB high, and we've tried to get back inside, failed, and pushed back out. So okay, this is looking very good. Then, so we've got this information, this idea that now we should be looking to get long, and now we're just looking for the third piece, which is the way to access the trade. And so that's what we're going to discuss. So again, if you just look at my mouse, we're going to be looking at the bit of price action in this region here, inside this box. And so this is just where, okay, the market's popped back up. It's got to the highs where we had a seller step in previously when we pushed above the IB high. And we're just going to watch this and see what happens in here that would make us, make our decision to get long. Okay, so now we come to the charts. Now, the Eurostoxx ladder is this one here, so second in from the left, and yeah, we're up at 55s, and we'll see that we are discovering that there's a seller there again. So let's start this. Okay, all right, so if we go, the market comes back down again to 53s, 52s, and it's pushing back higher again. All right, so we had a seller before at 55s, and we're back up there, and the market's holding at 55. And it's being reloaded. So okay, so someone there is like happy to hold 55s. Yeah, the market comes back up to 54s, takes 54s, and they go off it again. And again, the buyer tests back up 54s, 55s. And 55s are being reloaded, and then 54s going off it, now pushing back down again. So before, the buyers sit back in at 52, so we're seeing that again. Alright, now we're seeing the buyers at 52 get tested. Alright, and they push up, take 53 bid. But the sellers push back down and start selling back into 52. Alright, now this is where it starts to get interesting. So we can see that we've now sold 51s, now we're all the way down at 46, but it did this relatively easily. There wasn't any sort of back and forth trade here, and so now we've got to be thinking to ourselves, okay, this looks like someone's just pulled the liquidity. We had someone holding up there, and then that just disappeared, and so that's what our elite trader was looking for. He sees this pulling it as actually the sign of a strong buyer, because this buyer is trying to hide their interest, because they know they've discovered that there's a seller up there, and now they want to buy at the cheapest price possible. So they've pulled their interest, let the market trade down really easily. They've seen this buyer then step in down at these levels, sort of 46s, 45s. They saw the evidence of it and then got straight in at 47s. And so now we can see the market's push back up, and so we've got a bit of an auction developing down here. The market's come back down again, testing, so selling into 46s, selling into 45s. 45 got taken but then reloaded, and so you can see here that it looks like sort of 45s, 44s is the lowest we've been so far, and the buyer is quite happy to defend those prices. So what we don't want to see is the price come down to 43s, 42s. So now there's another limit order in at 46s, which is kind of above the bottom price that's being defended by the buyer. Right, and the market's pushed up a little bit higher. It's gone up to 50s. 51s and 52s. Okay, and we've got a bit of two-way trade at 52s, so the seller seems to be happy to trade 52s, and now the seller's pushing back down. So again, this has come back down quite easily, so the buyer's not really trying to buy in each price, they're trying to buy quite cheaply. Again, this is quite a good sign to what we've seen before. Alright, so the market bids back up, so 51s, doesn't get anything and comes back off quite easy. So why there might be some buyers, you know, trying to accumulate or trying to buy, the big buy that we're trying to position ourselves with doesn't seem to be moving up. So now, okay, let's see if they're still there, which we should definitely expect unless we've been shown a reason otherwise. And okay, there we go, we get filled at 46s. The market's back down at 45s, and we're expecting 45s, 44s to hold. So the market trades 45s, tries 44s, gets reloaded, bids 45 again. Tries 44s, reloads 45s again, and so we're seeing this kind of pattern that we saw before. So now we know that this buyer that was pulling liquidity, that wasn't supporting the market up around the 55s that we saw before, is still really happy to buy down here at these lows of this consolidation. Alright, and so we've tested a little bit higher again, but the seller's still there. So 48s, 47s, 46s again. So again, we're looking to see this buyer set back in, and there you go. Alright, so this buyer is happy to let the price stay down here. Isn't really driving the market up. It doesn't have, there is not really a thick bid at 45s either. So again, I think this buyer is trying to appear weak. But again, when the market trades lower into him, just reloads. And now the market's pushing higher again. And the seller's still there. But the seller's still there, but very much in a price, you know, that suits this buyer. You know, before the seller was happy to sell at 55. So now they're, you know, quite a few prices lower. So their position, seller's positioning is not as strong as it was at the highs. And again, 45s. And this buyer is still happy to accumulate. So we weren't really getting above 48 before. So we're back there now. So now we're I suppose finding out how strong the seller is, how much more interest they've got. And they're kind of testing each other with small lots, and then the buyer pushes higher. Alright, the buyer seems pretty happy to buy there now, so 48s, 49s. So now where the seller was selling from, the buyer is quite happy to buy from, so it's sort of like little support becomes resistance. Right, and they're still not being very aggressive. It's quite a passive buyer. They're not really trying to pay up and push the market. There they go, they get sold into. They're not pushing back. So while it might feel like this buyer's a bit weak if you're in the trade, if you think about it, this buyer's trying to buy at the most optimal price and trying to behave at the way to get that fill. So there they go, they're pushing higher to find some more trade. We've seen a little bit more intensity there, but it's happy to be absorbed. And still defending that sort of 48, I suppose 49 now. And there's 600 lots there on the offer at 51s. So a strong market should take that. There you go, it's been taken. And now we're pushing up to where we saw the seller coming before at 55s. Right, there we go. Letting up a little bit. It's being reloaded. Alright, sellers have pushed back down. Alright, can this buyer still hold and reload? Yes, and there we go, the buyer hits market and takes a few prices. Right, the seller's still happy to sell, but the buyer is really holding the price up here. So again down at 50s. Yeah, and we've seen them take 51 bid, buying 52s, 52s going bid. Seller's pushing back down again at 50s. Okay, is this buyer still here? Yes. Buying 51s, buying to 52s, taking 52 bid. There's a really big offer now here, or a big offer at 53s. Right, trading into some of that. There's still a decent sized bid at 53. Again, a strong market should look to take that. We're up at 53 again. You're bidding into 54, now 55 since we saw a seller, now we're heading into 56s. Okay, this isn't looking good for the seller, but it is looking good for our long. And there we go, now into 57s. Seller's pushing back down again. But this is looking very much in the buyer's favor now, as we've seen the seller hold 55s, but the seller's now definitely been pushed back. And the buyer's still very happy to absorb. Quite a small offer into 53s. Not much interest at 54s from the seller. Again, sort of like quite small offers. We're still holding around this level here, so 55s is still in play, and there is still a seller here. But then again, just thinking about what our buyer was doing, our buyer was letting the market come back, so the market buyer obviously wants to do that. Now we've had someone jump in here with over 1,000 lot bid, and the market's pushed all the way up to 57. So there are definitely some buyers here. If the seller's really big, the seller would take all of their interest, all those bids that came in, but they're not. So it looks like that seller has started to, I suppose, has got most of its interest filled. And then here we are bidding away, nearly at the highs. Okay, that's what I wanted to talk through. So let's leave that there and head back to the charts. So yeah, what we saw was the market, if you look at where my mouse is, back in that white box, was we saw some sellers defending up here, very happy to sell. We saw the buyer pull their liquidity, which allowed this big red candle here to drop us back down to the lows. And then the buyer just sort of tried to act as weak as possible to absorb at the bottom. And so that's where, you know, this whole larger setup piece comes into play, because that information is only useful to you and is only of help to you if you understand the fact that we're now in a market that, at least for the short term, is looking more likely to trade to the upside, because now you have to side with someone who's trying to look weak. And the clue there was the fact that they pulled their liquidity, so instead of the market trading down, it was pulled and the market just shot down. And then this buyer started accumulating, and each time the seller tried to sell into it, the buyer was happy to take it, push a little bit up, but they wouldn't drive the market very far and let the market come back again and absorb. And that's what was able to be used by our elite trader to get their positioning very much down near the lows. And then we saw the market, well, I suppose when the seller didn't have so much to offer down there, the market sort of tries to bid up to find a bit more, and then we find out that, okay, you know, I suppose that this market gets strong and then eventually breaks out, and then obviously the trade's on. So yeah, it's very much about how you can use this price action to gain your entry, but you have to understand it in the context of the bigger picture. So then if we go to our last slide here about the key takeaways. So obviously, yeah, what I've just mentioned are the key takeaways. So one is that you have to build your idea from the bigger picture setup, right? Because you need to understand who, sort of what buyer and what seller you might be expecting to see. And then you want to see some evidence of that from the ladder. Now in this case, it's quite possibly might have made you uncomfortable siding with that buyer because the buyer was trying to act weak. But if you understood what was going on, that's what you might want to see. Then, yeah, obviously, so then it's about using the ladder then to get confirmation that you're seeing the participants you expect to see, and then using that to try and position with them. Now, the elite trader did a really good job of this, and obviously has a lot of experience, because all they wanted to see, or all they needed to see to get the entry, was for this interest to get pulled and then to see where the buyer stepped back in and then instantly buying above. So there was some quite like aggressive, really quick thinking and didn't want to miss their opportunity. And so I suppose, at least in my case, not going to be that quick, but I think the lesson is very much there that if you get this idea and then you can see on the ladder that the participant, well, you're seeing signs that the participant you want to see is there, then that is your reason for your entry, your access. Try to get long at a point that can get filled, but also is in a position where you're going to get pressured and pushed offside at the least, and that obviously allows you to maximize your profits, but also to sort of have more sort of durability in your trade. All right, awesome. Thank you very much.